Hey, my name's James Nicholson. Welcome to my YouTube channel. In this video, we've got the latest inflation data. It's positive news on the whole, and this has made a big shift in what the market's expectations are now for an interest rate cut in December. So in this video, we're going to talk about what's good about the inflation data. We're going to update you on what's not so good because it's not all positive in this data. But also, what do the markets now expect to happen with the Bank of England? Have they had a shift towards cut, hold, or increasing interest rates? We'll cover that in this video as well. Now, if you're new around here and you haven't done before, do make sure you subscribe to the channel over there and hit that bell notification. We've just hit 51,000 subscribers. And by subscribing, you'll get all the latest house price news, interest rate news, property investing tips, and much, much more. So let's jump into this. So the inflation data, what's happening with that? Well, it's been sticky for 5 months. That's been an understatement. It was a 3.8% for multiple months in a row. But finally, we've got some respite from that. So inflation last month was at 3.8%, and it's now dropped to 3.6%, which is definitely what we want to see if we want the Bank of England to cut rates. I do. Because, look, the property market is very slow at the moment. I think a cut or multiple cuts in interest rates would stimulate that a little bit. And let's be honest, people are feeling pain at the moment. There's lots of people that have higher interest rates on their mortgages, on their credit cards, on car loans. And this stuff needs to drop in order to get the economy moving again and just give people a breather. That's very, very important. So we're moving in the right direction. The Bank of England said in their last meeting, they now believe that inflation has peaked. They probably kind of knew what was going to happen with this data, and that's why they put that statement out. So inflation's moving down in the right direction. Now, a lot of this is down to energy. And so the energy did go up in October. Ofgem did increase your energy costs again. The cap went up by 2% this year. So how does that compare to last year? Well, last year it was 9.6%. So this is a big difference, and that means that that's going to bring down inflation. So it's still going up. Energy's still getting more expensive, but not at the rate that it was before. So as people get pay rises, they get used to this stuff. It's becoming a little bit easier, although it would be good if this energy started crashing down to what it was a few years ago. So what else has gone down? Well, hotels were a big help this month. They're in the inflation basket, and they were down 2.2% for the month. And that's good. Means obviously not so good for the hotels. They're probably cutting their prices because they're not as busy as they normally are. On an annual basis, hotels are also down 0.2%. So we don't have the Taylor Swift effect that we had previously in the summer, where hotels were going up at a crazy rate wherever she was playing concerts. So that's important. But if you don't have money, you're not staying in hotels. What about other more important things? Well, food is the one that's not good. And so this is, I think food should be more, have more weighting in there because you can't not eat. So food was 4.9%. It is 4.9%. That's expected by next month to increase to 5.3%. At the worst possible time with Christmas, it's going to get more expensive. And that's not great because that hits lower income families significantly more than anyone else because a big percentage of their pay goes towards food and drink, and that isn't great. And so if you look at it like that, it isn't helping people, and that's going to impact, I believe, the economy because people are going to have less disposable income when they're spending more on their food. So interesting stuff there, not good in news in my opinion. What about service inflation? This was the one that the Bank of England constantly spoke about. So I listened to the Bank of England meeting so you don't have to, and the service inflation dropped this month, which is good. It was 4.7 it's down to 4.5%. So what is service inflation? Well, we're a service-led economy. Your barber is a service-based business. A solicitor is a service-based business. A restaurant is a service-based business. Haircuts, massages, beauty treatments. These businesses have had to increase costs significantly because of things like energy going up. You imagine if you run a restaurant, you've got to have it warm. No one wants to go in there and eat in a coat, do they? So that's important that service-based businesses get a little relief. The energy costs not going up as much, hopefully will help them going forward. Now, I've done it a little different in this video today. If you got this far and you didn't like it earlier, do like the video. That's really, really important that you like the video for the YouTube algorithm. So do like the video while you're here. That will push it out to more people. Let's do a test, see if this way is more popular than asking at the beginning. So we'll see. So food, service inflation is something that the Bank of England talked about every single meeting. They were concerned that service inflation was still very high. They'll be pleased to see that this is coming down. And if it's moving in the right direction, that gives us the opportunity for rate cuts to come a little faster, which is good. What about core inflation? So core inflation strips out volatile stuff. So it strips out energy, it strips out food. So they like to give us the stat on this. I don't think it's the most relevant, but that went from 3.5% to 3.4%. Why I don't feel that's the most relevant is because food costs hit people hardest. They hit the lowest income people. So I think that's more important to me, what the food costs are out of probably anything in the basket of goods. You talk about airfares, you talk about hotels and all this kind of stuff, which they often talk about in the inflation basket. But if you can't afford to eat, you're really going to be struggling. You don't need to go on a plane. You have to if you maybe have some business, but you don't need to necessarily go on a plane. And so that's why I don't think core is the best measure, in my opinion. So what are the markets saying about this? Because this is important. We want a cut. That's important. Now, what happened, interestingly, in America, they just revised their jobs data down. They've got the September data out. It's a bit of a mess over there after the government shutdown. They revised that down to minus 40,000, meaning, look, that means the Fed maybe is more likely to cut. We don't know because they are saying at the moment they will never give us the October data, which is a little suspicious, meaning that's probably quite bad. So we'll wait and see what happens there. But the fact that their jobs have declined means they're more likely to cut, which means the Bank of England has a case for cutting as well. So what do the markets say? There's a cut. The chance has gone back up to 80%. We're only a few weeks out now. That's good. If the markets are predicting that, as it gets up and closer, you'll see, and what we'll probably see from this, because let's face it, we don't really care if the Bank of England cuts rates. We just want our mortgage rate to be cut. If everyone's expecting cuts, what we'll see is something called the SONIA swap rate drop. That's the rate that your bank borrows on. That's what we're really concerned about. If that drops this week, which it more than likely will, lenders will cut. And they will pass on those cuts to you before the Bank of England do anything. So I think we're going to see some more rate cuts from mortgage lenders this week. I'll update you as and when that happens. And last thing, our Black Friday offer is open now. Tons of you, loads of familiar faces that watch this channel have already enrolled in that. And we launched that to the VIP list, to the people on our mailing list in the first week. We've actually added a little bit more. So you're going to get training on serviced accommodation. You're going to get training on buy, refurbish, refinance, rent. That's my favourite strategy for increasing equity. You're going to get training on HMOs. You're going to get training on auctions we're going to add into there. And we added another thing was training on rent to rent. So if you don't have tons of money, you can rent a property and rent it out as well. So there's loads involved in that. Click in the description to find out now. It will go up obviously after Black Friday. It's in the first comment and in the description. Check it out while you're here. Do smash like, do subscribe, and check out all the other content as well on this channel, including this video right here.